Good morning, everyone.
Morning, sir.
Morning, sir.
Okay. Yes, I hope you can hear me clearly. Last week, we started personal income tax, and we saw one question on personal income tax. We are going to continue again on this personal income tax. We are going to continue again. So let's look at another question on personal income tax. That is, let's look at question 2. This question 2, let's look at it. Examinable question 2. Somebody can help us read it.
Question. Malam Sule Yusuf is an employee of Temidire Limited. His salary is 5 million naira per annum. He is married with 5 children. The first 2 are from his first wife, and the remaining from the second wife. The 2 wives live with him. The eldest child is now a university graduate and teaches in a secondary school in Kaduna, while the remaining children are university students. Malam Sule Yusuf has a life assurance policy with Jabu Insurance Limited. The sum assured is 250,000 naira and he pays a premium of 2,005 per month. He also contributes 1,000 naira monthly to a pension scheme approved by the Joint Tax Board. The following information is made available. A. The company pays 180,000 naira per annum on his accommodation and provides him with an official car, which has a market value of 2 million naira. He spends 6,000 naira on his aged father and 7,000 naira on his aged mother. Both have no sources of income due to old age. He will be retiring December 31, 2021, and he will pay a gratuity of 300,000 naira. And D. He will also pay a lump sum of 100,000 naira for loss of office. Required. Compute his tax liability for the relevant year of assessment.
Thank you very much. So we are asked to compute the tax liability of Malam Sule for the relevant year of assessment. So the information given to us in respect of Malam Sule is in respect of 2021 year of assessment. So since most of the income given to us from Malam Sule, they are employment income. So we are going to assess it on actual year basis. So going back to this question, what are the income of Malam Sule? Like I said last week, if you want to compute a personal income tax, you have to divide the income into 2. Earned income and what?
Unearned income.
Earned income. They are the income derived from service rendered that involve your physical and mental effort. This earned income, we can also divide it into 3. Employment income, professional income, and what? And trading income. The employment income is assessed to tax on what basis? Actual year basis. Professional income or trading income, they are assessed to tax on what basis? Preceding year basis. Do you understand? Do you understand? Now, going back to this question, what are the income? What type of income does Malam Sule earn? First income Malam Sule earn is salary per annum. This is an employment income. We are going to put it under our earned income as one of his first income. Going back to the solution now, Malam Sule Yusuf, computation of tax liability. For what year of assessment? For 2021 year of assessment. So one of his income is what? one of his earned income is what? Salary, which is how much? 5 million naira. So the salary is 5 million naira. So that is earned income. The salary is 5 million naira. Let's read ahead again. Let's read. What are the other income he has? What are the other income he has? Molam Sule have a life assurance policy with Jabu Insurance, and he pay a premium of how much? A premium of 2,005 per month. That one is a life assurance policy or life assurance premium is one of the tax exempt. Abi, last week I mentioned example of tax exempt. What are the other example of tax exempt I mentioned last week?
Pension.
Yes, correct.
Yeah.
Oh yeah,
Donations to approve the.
No. It's not tax exempt.
National Housing
Look at
Fund.
pension, National Housing Fund, and
National Health Insurance.
National Health Insurance. Let me go back to the format, please. Let's understand this format very well. We need to understand the format too. After we get earned income, we plus it with unearned income. We get what is called total income. If we have dividend, we can less dividend as frank investment income. We get net total income. After we minus dividend, the net total income we minus what is called tax exempt. What are the tax exempt? You can see them. National Housing Fund contribution, National Health Insurance Scheme, life assurance premium, and national pension contribution. We also have another tax exempt called what? Gratuity. What did I say on gratuity? Who can explain the treatment of gratuity to me? I said, if you recognize gratuity as part of your employment income, you also recognize it as your part of your tax exempt. But if you don't recognize gratuity as part of your as part of your earned income, you will not recognize it as part of the tax exempt. Do we understand? Look at this format. You can see that under the earned income, which is employment income, gratuity is part of it. When we get to tax exempt too, we recognize gratuity is the same amount. Some said it's better don't recognize it as income. If you don't recognize it as income, you will not use it as tax exempt. Do you understand? Do you understand?
Yes, sir.
So going back to this question now, going back to this question of Molam Sule Yusuf. So let's look at the income we have first before any tax exempt. Pension is a tax exempt. They pay pension. Now, look at this one. Look at this statement A. The company pay 180,000 per annum for its accommodation. This 180,000 that the company pay for its accommodation will be treated as what?
Benefit in kind.
Benefit in kind. So benefit in kind is part of its earned income. Abi? It's part of its earned income. Secondly, the company also provide him official car with a market value of 2 million. How do we treat this official car? This official car too is a benefit in kind called other assets. So how much are we going to recognize for him as income based on this official car?
5% of 2 million naira.
5% of the market value or the cost of the asset. I classify benefit in kind into three types. I said provision of accommodation, provision of other assets, provision of domestic or what do you call it? Domestic or which staff? Provision of domestic staff, sha. So I now said if a company provide a staff official car or any other asset, 5% of that amount will be recognized as what? Benefit in kind. So going back to this solution now, aside from salary, which is 5 million, we have benefit in kind. Under the benefit in kind, we have accommodation. How much is accommodation? 180. We have official car, 5% of 2 million naira. 5% of 2 million naira. How much is it going to give us? The 5% of 2 million naira, it will give us 100,000. So you can see the 100,000. Now, apart from this, we have another income called, at the end, it will be retiring 31st of December 2021. And they will pay him what? Gratuity. Gratuity, we can recognize it as income. If we recognize this gratuity as an income, what is going to happen?
We are going to disallow it. Like we're still going to disallow it.
Deduct it. We are going to deduct it as part of the tax exempt. Do you understand?
Yes, sir.
So look at the income we now recognize. Under the earned income, all the income we recognize, they are employment income. One is salary. Second is benefit in kind. Why the third one is gratuity? In this question, we don't have any unearned income. What are the examples of unearned income? What are the examples of unearned income? Rent income, rental income gross, interest income gross, dividend income gross, royalty income gross. They are the unearned income. We don't have that in this question. So that means our earned income plus unearned income is going to give us a total income of 5,580,000. Earned income plus an earned income. It will give us total income of what? 500 and what? 5,580,000. 5,580,000. After you get total income, what do we minus? We less tax exempt. Abi?
Yes, sir.
So, how many tax exempt do we have in this question? Who can show me the tax exempt we have in this question?
The gratuity that we added before.
Okay. Which other one?
Life assurance.
This life assurance, is it the sum assured we recognize as tax exempt or the premium?
Premium.
Premium. Look at it. He paid premium of 2.5 per month. What do we do to this 2.5?
We deduct it.
2.5 per month. What do we do to it?
We multiply by 12.
We multiply it by 12 to get for 1 year. We multiply it by 12 to get for 1 year. 2.5 times 12. That will give us 30,000. That means life assurance premium is 30,000. Do we understand?
Yes, sir.
Aside from life assurance, which other tax exempt does he have?
Pension.
Pension. He paid pension. How much pension?
1,000 naira.
1,000 naira.
So 1,000 naira times what?
12.
Times 12.
That is 12,000 naira in a month, in a year. Abi? So under my tax exempt, I will have life assurance premium, 30,000. Pension, 12,000. Gratuity, the same amount. That income of gratuity of 300,000 will come again to come and minus it, 300,000. That means the sum of my tax exempt. What is the sum of my tax exempt? The sum of my tax exempt is now what? 342,000. This 342,000 we minus it from the total income. If we minus this 342,000 from the total, what do we get? If we minus it, what do we get? If we minus the 342,000 from the total income, what do we get? We are going to get 5,238,000. 5,200 and what? 38,000. That is called gross income. 5,238,000 is called what? Gross. Can we see the gross income?
Yes, sir.
Yes, sir.
After the gross income, what do we now do? After the gross income, what do we do? The less tax relief. The tax relief we normally less is called consolidated relief allowance. After the gross income, we less tax relief, and the tax relief we normally less is called consolidated relief allowance. What are the how do we get consolidated relief allowance? Higher of 200,000 or 1% of gross income plus 20% of gross income. In this case, 200,000, 1% of this gross income, 1% of 5,238,000. How much is it giving us? 1% of 5,238,000. How much is it giving us? It will give us 52,380,000, which is less than 200,000. That means we are going to take 200,000 plus 20% of gross income, 20% of 5,238,000.
Yes. 1,000,000.
Hello?
47,600. 1,047,600.
1,047,000. At the end of the day, the sum of the two will give us 1,247,600. Abi? We minus it from the gross income. If we minus it from the gross income, we now get what is called chargeable what?
Income.
Income. So this our chargeable income. How do we compute it to tax? How do we assess it to tax? The chargeable income. How do we assess it to tax? First 300,000 at 7%. That one will give us tax of how much? 21,000. Abi? Can we all see that?
Yes, sir.
Second 300,000 at 11%. It will give us tax of 33,000. Next 500,000 at how many percent?
At
15%. It will give us tax of how much? 75,000. Next 500,000 at 19%. It will give us tax of how much? 95,000.
95,000.
Can we still go ahead? Can we still go ahead? Look at the chargeable income we have. We have removed 300,000. We removed 300,000. We remove 500,000. We remove 500,000. Is it going to be a remainder? What will be the remainder? If we have removed this 300,000, 300,000, 500,000, 500,000. What will be the remainder?
790,400. 790,400.
What will be the remainder?
790. Yes, sir.
No. Now we remove another 1.6. We can remove this 1.6 again. There will still be remainder.
Yes, sir. It will still be
At
remaining 1
21%.
million. It will still be remaining 1 million.
No. If we remove 1.6, at the end of the day, if we sum 300,000, 300,000, 500,000, 500,000 plus 1.6, if we sum them together, it will give us how much?
3.2.
3.2. What will now be the balance?
400.
The balance will be 90,400. That one will be assessed at what percentage? 24%. So the total tax due is 749,696. 749,696. So that is the total tax due. So we have done with that. We can look at the more question, another question that is more concrete than the one we have been looking at since. Let's look at Alhaji Tijani. Let's go to Alhaji Tijani question 3. Alhaji Tijani.
Alhaji, can I read, sir?
Yes.
Alhaji Tijani is married and has 6 children, aged between 4 and 21 years. All, except Phillips, aged 21, are still in school. The following details were obtained from his employment records. 1. He retired from his previous employment with Standard Chartered Company Limited on September 30th, 2015. He was on an annual salary of 6,630,000. 2. On October 1st, 2015, he took up a new employment with Ryoko International Consulting on a salary of 9,600,000 per annum, transport allowance of 480,000 per annum, and rent allowance of 660,000 per annum. From October 1st, 2015, he will be on a pension income of 960,000 naira per annum from his pension fund administrators. On 4, contributions to National Housing Fund and National Pension Scheme are 195,000 naira and 650,000 naira respectively. Alhaji Tijani Bello has a life assurance policy on his life with the sum assured of 7,500,000 naira and annual premium of 660,000 naira per annum. He lived with his wife and 2 aged parents, on whom he spent a total sum of 1,500,000 naira per annum. Alhaji Tijani Bello received dividends from his publicly quoted investments on Nigeria Stock Exchange as follows: 1st July 2013, 800,000. January 1st, 2014, 600,000. 1st July 2014, 720,000. 1st of January 2015, 950,000. Required: compute the personal income tax payable by Alhaji Tijani Bello for the relevant year of assessment. 15 marks.
Thank you very much. So, first, you need to know which one is the relevant year of assessment. What is the relevant year of assessment in this question? What is the year of assessment? Which year are we assessing the tax, the Mr. Alhaji Tijani to tax? The year he received employment income. Which year he received employment income? Year he received employment income. Look at it. Which year? 2015.
Yes, sir.
So that means the year of assessment will be 2015. Because employment income is normally assessed on what basis?
Actual year basis. Am I the only one? I can't hear the lecturer again. Am I the only one?
Same here too.
Actual employment income is normally assessed on actual year basis. So the year of assessment is on what? Actual year basis. 2015. So is the year of assessment.
Your network is breaking, sir. We can't hear you. Even when you talk, it's breaking.
Hello, can you hear me now? Hello, can you hear me now?
Yes, sir.
Yes, sir.
Yes, yeah.
So the year of assessment is 2015. Now, let's go back to this question. Let's start from one by one. He retired from previous employment, which is what? Standard Chartered Bank, Standard Chartered Company Limited, on September 30th, 2015. He was on annual salary of 6,630,000. This one now is an income, and it's an earned income because it's an employment income, Abi?
Yes, sir.
The annual salary he collected is 6,630,000. The question is, what out of this amount, how many months are we going to recognize for him
You go
while we are
9 months.
computing tax?
That will be 9/12.
9/12.
Yes, sir.
9/12. So look at it. Under the old employment, he received annual salary 9 months. 9/12. 9/12 times 6,630,000. It will give us 4,972,500. 4,972,500. Next is what? It took on October 1st, 2015, he took up a new employment with what? Ryoko Limited. A new employment with what? Ryoko International Consulting. On a salary of how much?
9,600,000.
9,600,000 per annum.
Yes.
This 9,600,000 per annum, how many months are we going to recognize?
3
That will
over
be 3
12.
over 12.
3 months, starting from October, November, and what?
December.
3/12. So under his earned income, we divide his earned income into two. We said one is coming from old employment. We said another one is coming from new employment. I divide the earned income into two. One is coming from what? Old employment. Another one is coming from what? New employment. This one coming from new employment, basic salary, 3/12 times 9,600,000. 3/12 times 9,600,000. That will give us how much?
2,400,000.
We can see this 2,400,000. Secondly, is under the new employment, he was also giving what? Transport what?
Allowance.
Of how much?
480,000 naira per annum.
How many months are we going to recognize?
Still 3 months.
3 months. So 3/12 times 480,000. 3/12 times 480,000. Transport allowance. It will give us 120. Another one.
Sir.
Yes.
Okay, the old employment income, you said is 9 divided by 12 times the 660,000, right?
Yes.
And that was what gave us the 4 point something.
Yes. So apart from transport allowance, he received rent allowance. Rent allowance means housing allowance for 660,000 per annum. How much are we going to recognize?
Still for 3 months.
3 months. 3/12 times 660. It will give us one what? 165,000. That is what is going to give us. Do we understand? Do we understand?
Yes, sir.
Yes, sir.
Now, Note 3 said from October 1st, 2015, he will be on a pension of 960,000 per annum from his pension fund administrator, pension income. You know, he has worked in Standard Chartered Company because when he was in chartered company, they normally contribute pension for him. The assumption now is since he has left Standard Chartered Company, the pension they now contribute for him there, they are now paying it back to him as an income. Pension too is an earned income and is subjected to tax. Pension too is an earned income and is subjected to tax. So now, from October 2015, he will be on pension income of 960,000 per annum. How many month pension income are we going to recognize?
So,
How many month pension income are we going to recognize in 2015?
It's 3 now. He started receiving it from October.
okay, 9.
Actual year basis.
Yes,
It's
it's
3
3.
months.
3 months, yes.
Starting from October, November, and December. But by next year, you will collect 12-month pension income.
12 months, yes.
But this 2015 that we are doing is going to collect 3-month pension income. Do we understand? Do we understand?
Yes, sir.
Yes,
But
sir.
from the question, it's not necessarily going to be stated that maybe it's from his former company, or he will only receive pension income if he changed employment.
What they assume here is since he has worked maybe for 30 years or 25 years in that old company, they have contributed his pension there. He's now up to 50 years. That the pension they have been contributing for him for the last 20 years, he wants to start collecting it as an income. So it's from the old employment. So the pension income is from the old employment. 3 months.
Excuse me, sir.
12. I'm coming. 3/12 times 960,000. It will give us 340,000. So you can go ahead with your question.
I said it's only when he changed job. I just want to confirm something. It's only when he changed employment that the assumption can come. And that is where he will be given that maybe he got pension income from.
Yes, it's only when he changes employment.
Okay, sir.
And there are some conditions you can where they will be paying your pension. They will be paying you back your pension, which is beyond tax. Maybe you are more than you are more than 50 years. You understand? You are no more. You understand? That tax we just assume here before they can be paying you back that your pension contribution. There are some conditions. So that is part of his income. Now let's go to note 4. Note 4 said contribution to National Housing Fund and National Pension Scheme. these two is what type of exempt? It's a tax exempt, Abi?
Yes, sir.
He also have life assurance policy. It's a tax exempt.
Yes, sir.
You understand?
Yes.
So what other tax exempt do we have? So these are the three type of tax exempt. But let's go to note 7. Note 7. Look at note 7. Note 7.
Dividend.
He received a dividend from a public quoted investment on Nigeria Stock Exchange as follows. Dividend income is which type of income?
Earn income.
Earned income or unearned income?
Earn income.
It's an unearned income.
Unearned income.
Unearned income. Dividend income is an unearned income. Dividend income is what? Unearned income. Rent income is an unearned income. When you have a property, you are receiving rent. It's an unearned income. Interest on your fixed deposit is an unearned income. Royalty is an unearned income. So, unearned income is assessed to tax on what basis, my people? On what basis do we assess unearned income to tax?
Preceding year basis.
So that means out of this dividend given to us, which one are we going to take? Which one are we going to recognize? Since unearned income is assessed to tax on preceding year basis. This question, what year of assessment are we doing? What is our year of assessment? Like I said earlier,
2015.
2015. We know that 2015 is our year of assessment. So if we want to do preceding year basis in 2015 year of assessment, which income are we going to take?
2014.
2014. That means this income of 2014 for the 2 years, we are going to take it. We are going to add it together. $600,000 plus 600,000 plus what? 790,000.
No, 720,000.
Or plus 720,000. That will give us 1,320,000.
320,000.
1,300,000 and what?
20.
20,000. So that is the unearned income we are going to recognize. You can see under unearned income, we have dividend 1,320,000. That means I will now add earned income, both new employment income and old employment income, and the unearned income. I will have everything together. Earned income plus unearned income will give us what? What do we
Total
call
income.
earned income plus unearned income?
Give us our total
income. In that case, our total income is going to be how much?
500.
9,200,000 and what?
17,500.
500. After you get your earned income, your total income, that dividend that you recognize again, you will treat it as a frank investment income. What is frank investment income? Income that has been subjected to tax as source. And the tax is subjected to, is a final tax. It's not going to be subjected to any further tax again. So in that case, This dividend that we recognize here, we are going to remove it again as a frank investment income. We are going to minus it again from the total income.
Sorry, sir. For exam's sake, is it possible not to even put it at all in the first place?
If you don't put it at all, you will miss a mark. You will be
Okay.
penalized. Yes, you will miss a mark. If you don't put it at all, you must show it as your income. You come and remove it again. That is what the law says. You have to come and show it and remove it. So when we remove it, our net total income is going to be what?
7,897,500.
7,500. From your net total income, we can now less your tax exempt. What are your tax exempt in this question? What are the tax exempt? What are the tax exempt? What are the tax exempt? Number one tax exempt that we have in this question is NHF, National Housing Fund,
Yes.
followed by National Pension Scheme. We also have Life Assurance Premium, which that one is how much?
660,000.
So we come and less it. So we add all the tax exempt together. If we add all the tax exempt together, it's giving us 1,470,000. We will less it. Once you less it from your net total income, that means your gross income is going to be 6,427,500. Your gross income is going to be 6,427,500. That is your gross income. From your gross income, you will now less tax relief, which is consolidated relief allowance. Tax relief, which is what? Consolidated relief allowance. So in that case, higher of 200,000 or 1% of gross income, which one is higher? 200,000 is higher than 1% of this gross income. You take 200,000 plus 20% of what? Gross income. 20% of gross income is how much? 1,285,500. Addition of the two will give us 1,485,500. 1,485,500. That is addition of the two. When you minus it from your gross income, you will get chargeable income of how much? Chargeable income of 4,942,000. From your chargeable income, you can now compute your tax. From your chargeable income, you can now do what? Compute your tax. First 300,000 at 7%, 21,000. Second 300,000 at 11%, 33,000. Next 500,000 at what? 15%, 75,000. We have another one called next 500,000 at 19%. How much? 95,000. And next 1.6 as 21%, 336,000. What will be the remainder? If you add from 300,000 to 1.6, it will give you 3.2. If you minus the 3.2 from
1,742,000.
So that will give you 1,742,000. that one will be at 24%. That will give him
24%.
418,080. So your total tax due is 978,080. That is your total tax due. I think that one is clear enough. That one is clear enough. Let's look at another one. Because there are several ways they can test personal income tax. We need to look at more before we know what we are doing. Let's look at another one. Let's look at 4, examinable question 4. Oh, yeah.
Mr. James.
Mr. James Akpobo was born on August 1, 1949 in Kaduna. He attended community primary school, Kaduna, and graduated from the University of Ibadan in 1974. He was employed as the site engineer of XYZ Limited in Jos and spent 20 years working for this company. On his retirement in 1995, he sought an advice of his friend on profitable venture in Nigeria. Thereafter, he decided to register James Akpobo Enterprises, which is into buying and distribution of building materials. He commenced business on June 4, 1996, making up account to December 31st every year. The statement of profit or loss of James Akpobo Enterprises for the year ended December 31st, 2023 is as follows. Revenue, 9,500,000. Cost of sales, 15,200,000. Gross profit, 14,300,000. Other income, 800,000. You have 15 million. Administrative expenses. Staff salaries, 4 million. Printing and stationery, 248,000. Postages and telephone, 36,200. 68,100. Rent, 800,000. Donation, 50,000. Repairs and maintenance, 41,500. Defalcation and embezzlement, 120,000. VAT on equipment, 25,000 naira. Entertainment, 196,000. Allowance of doubtful debt, 48,000. Legal fees and other professional charges, 200,000. Audit fees, 250,000. Bank charges and commission, 147,500. Depreciation, 82,100 naira. That's a total of 6,312,400. You deduct it from the gross profit. Then the net profit is 8,787,600. You are provided the following additional information. Income comprises reversal of allowance for doubtful debt earlier disallowed, 674,900. Sales of scraps, 125,100. Total of 800,000. During the year, he received a gross dividend of 220,000 naira. Donation was made to XYZ political party. Capital allowance of 48,000 was agreed with the relevant tax authority. An accounting clerk in the organization was involved in the defalcation and embezzlement. 5. Mr. James Akpobo has a life assurance policy on his life for which he pays an annual premium of 600,000 naira. Mr. James Akpobo has 4 children and maintains his aged parents. Mr. James Akpobo makes the following contribution per annum to National Housing Fund, 120,000. National Health Insurance Scheme, 48,000 naira. Required Compute the income tax payable by James Akpobo for the relevant assessment year. 18 marks.
Thank you very much. Let me go back to the formats. Let me go back to the formats for us to understand this question. You know, under the earned income, we said we divide the earned income into three. We said employment income, salary, pension, benefit in kind, housing, they are employment income. We now say there is another one called trading income, income coming from trading. It is for sole proprietorship. We have another one called professional income. In this question we are coming from, which type of income do we want to subject it to tax for James Akongbo? Which type of income do you want to subject it to tax? Trading income. Because Mr. James Akongbo is not an employee. He's doing his own business. Abi?
Yes, sir.
Do you understand?
Yes, sir.
He's doing his own business. He's not an employee of any company. He has his own business. He's a self-employed. But his trading income is going to be subjected to tax. Trading income too is part of earned income. Do you understand me?
Yes, sir.
Do you?
Yes, sir.
Now, this business report given to us, the profit and loss account of James Akongbo given to us, is for the which year ended?
2023.
If we want to assess trading income to tax, how do we assess it to tax? Is it on actual year basis or preceding year basis?
Like on preceding year basis.
Trading income is assessed to tax on preceding year basis. That means this profit and loss of 2023 is going to be assessed to tax on what? In which year?
2024.
2024. That is the logic. It's going to be assessed to tax in 2024. That is the logic. We are going to assess it to tax in the year 2024. Before we assess it to tax, we have to convert this thing, this report given to us, this net profit given to us. We cannot use this net profit. This net profit, are we going to use it to assess it to tax? No. We will convert it to what profit? What are we converting it to? This net profit, what are we converting it to? We convert it to adjusted profit. Have you forget the adjusted profit we did like 2 weeks ago? This net profit, before we can assess it to tax, we convert it to a what? Adjusted profit.
Adjusted profit.
So if you want to compute the tax liability of James Akongbo, computation of tax liability, tax computation for 2024 year of assessment, we are going to start from net profit. The net profit is given to us in the question. Look at the net profit. Add back what? What are we adding back to the net profit? If we want to get adjusted profit, what are you adding back to the net profit?
Disallowable expenses.
Disallowable expenses. We have done this topic 3 weeks ago. You should remember. We add back disallowable expenses. What are the disallowable expenses? Let's go and check the expenses one by one. Staff salaries. Is it allowed or disallowed?
Allowed.
Is
Disallowed.
allowed.
Printing and stationery. Is it allowed or disallowed?
Allowed.
Allowed.
It's allowed.
Postage and telephone. It's allowed.
Yes. Electricity allowed.
Electricity allowed.
Allowed.
Rent. Is it allowed or disallowed?
Is allowed.
This is for the office or business.
It's for the office. It's allowed.
Is allowed. Okay.
What about donation? Donation. Is it allowed or disallowed?
This is disallowed because it's not specific.
If it is made to approve bodies like public institution, public university, general hospital is allowed. So let's go and check notes. Is there any note on donation? What is the note on donation?
It's made to XY political. This is disallowed.
So donation is made to XYZ political party. Are we going to allow it or disallow it?
We
Disallow.
disallow it.
We disallow it. Secondly, if a question like this, right, donation, they do not tell you whether it's made to XYZ political party or is made to approve institution, are you going to allow it or disallow it?
Disallow it.
Allow it.
Allow it. If there is no
Disallow.
any additional note on donation, you disallow it. Do you understand?
Yes, sir.
Do you understand?
Yes, sir.
So donation is disallowed. Repair and maintenance, is it allowed or disallowed?
Allow.
Allow.
Allowed. Defecation and embezzlement, is it allowed or disallowed?
Disallowed.
It's allowed.
Disallow.
Defecation and embezzlement can be allowed, it can be disallowed. What did I say
Yeah.
on defecation and
Yes.
embezzlement?
If it is
You mentioned that if it's a superior official, like the senior, how am I going? Senior supervisor is going to be disallowed.
disallowed.
But if it's junior, it's going to be
Junior
allowed.
staff.
So now let's go to the note. Who committed defecation and embezzlement?
The
Who did?
The clerk, accounting clerk.
Accounting
Junior
what?
staff.
The-
Accounting clerk is a junior staff, Abi?
Yes.
Yes, sir.
I'm going to disallow it. So please let me do adjustment to the solution because my own school of thought, I believe either defecation committed by accounting clerk or senior staff is going to be disallowed. But the general truth and the ICAN view is that if it is junior staff, you allow it. If it is senior staff, you disallow it.
But a clerk is junior staff.
So
It's
clerk is
supposed to be allowed because it's a junior
it's
staff.
supposed to be allowed. In my solution,
Yes, sir.
I disallow it. I want to correct it
Okay.
Okay.
because
Alright.
this question was set in ICAN. In their own solution, they allow it because they believe accounting clerk is a junior staff. But my
Yes.
own, I'm from the critical school of thought. I always, you understand, I believe my own but I have to follow what they do. Do you understand my point?
Yes, sir.
Yes,
But
sir.
when you are in academic arena, I can defend my own point. How can you defecate? You are not allowing it.
It's to encourage small thieves.
That means they will encourage small thief. So that is the reason why, if you look at my last year lecture, I argue it. But I've said a lot of ICAN questions when this thing come about, they normally allow it. Since you are writing ICAN exam, you are not defending anything. Let's follow the pattern. Even in the other professional exam too, they normally allow it. So let me just do the correction now.
But since you are as a lecturer too, you are feeling this kind of thing. This type of thing should be disallowed. It should be frowned at. Even the tax authority shouldn't even allow it at all. It should be frowned at.
Yes.
For exam
Even task
purpose.
for
Yes,
exam
I
purpose.
understand.
Do you understand? So for
Yeah.
exam purpose, that is what I'm saying. Left to me, if not for exam purpose, we don't allow this. We cannot allow this. But for exam purpose, like I said, for exam purpose, so please, so that I will not convince students. So let me just do the correction now. It's part of the correction I said I would do since. So it's better we are in the same page with ICAN, so that you not go and see it somewhere. They will now say, why this man? Okay, it's now corrected. Can you see the screen?
Yes, sir.
Can you see? Okay, it's corrected now. So since it's committed by accounting clerk, it's allowed. It's allowed. So the next is VAT on equipment. Is it allowed or disallowed? VAT on equipment. Is it allowed or disallowed?
It's allowed.
Allow
It's
or disallow? It is
Disallowed.
disallowed. When you pay VAT while you purchase equipment, you should capitalize it on the cost of the equipment. You should not expense it. Entertainment. Entertainment. Is it allowed or disallowed?
Disallowed.
Entertainment.
It's disallowed.
Huh? Who do we entertain?
Disallowed.
It is disallowed. Since we are not stated, it was not stated who we entertain. But assuming we entertain customer, it's allowed. Allowance for doubtful debt. Allowance for doubtful debt means provision for bad debt. Provision for bad debt. Is it allowed or disallowed?
Disallowed.
Provision for bad debt. Is it allowed? What is the treatment for provision for bad debt?
All provisions are disallowed, except if it's for special or specific purpose.
In specific.
Assuming provision for bad debt are in two. We have specific provision for bad debt. I mean,
Yes.
we have
Yes, sir.
general provision for bad debt. General provision for bad debt
Is disallowed.
general provision for bad debt is disallowed. Why specific is allowed? General provision for bad debt is disallowed. Why specific is what? Is allowed. Now, are we told that this provision for bad debt is general or specific? Is it general or specific?
Let's check additional information.
We are not told whether it's general or specific. What are we going to assume?
We'll disallow it.
We are going to assume it is what?
It is a
General.
general
And we do
provision.
what?
We disallow it.
Legal fee and other professional charges. Is it allowed or disallowed?
Allowed.
It is allowed.
Depends.
Yes,
Yes.
sir.
But it
Audit
depends.
fee. Is it allowed or disallowed?
Allowed.
Allowed.
Bank charges. Is it allowed or disallowed?
Bank
Allowed.
charge.
Allowed.
Allowed. Okay.
Depreciation. Is it allowed or disallowed?
Disallowed. Disallowed.
That means the expenses we are disallowing. Donation, VAT and equipment, entertainment, allowance for doubtful debt, and depreciation. Those are the expenses we disallow. If you look at them, are disallowable expenses. These are the expenses we disallow. Now, if we go to the income side of this account, this company account, they say they have other income of how much?
800,000.
800,000. You know, there are some income, when we are computing adjusted profit, we normally say add disallowable expenses, less what? Less what? Which income are we lessing? While computing adjusted profit?
Bank investment.
Add disallowable expenses, less non-taxable income. I gave you the format. While computing trading adjusted profit, I said there are some income that when you receive it is not subjected to tax. Non-taxable income. Abi?
Yes, sir.
If we want to get adjusted profit, we said add disallowable expenses, less what?
Non-taxable income.
Non-taxable income. This 800,000, they call it other income. We don't know whether it's taxable or non-taxable. Additional information can tell us whether this income is taxable or non-taxable. Abi?
Yes, sir.
Yes.
So let's go to the additional information. Look at the additional information one. That other income of 800,000, they said it comprises of what?
Reversal of allowance for doubtful debts earlier disallowed.
Provision for doubtful debt. We disallow it as a non-tax, as a disallowable expenses, Abi.
Yes, sir.
We now suddenly, that provision for doubtful debt that you disallow, you now recover money from that debt. You now treat it as other income. Is it taxable income or non-taxable income?
It's
Non-taxable.
non-taxable.
You can't tax it.
Non-taxable.
Non-taxable, because it's a matter of logic. The expenses, you don't allow it for tax. The income, are you going to subject it to tax?
No.
No. It is non-taxable. The expenses is not allowed. The income too will not be subjected to tax. What about sales of scrap? We sell scrap material. Is it taxable or non-taxable?
Non-taxable.
It's
Why?
taxable if it is the company's product. It is taxable. But
Sales of
if it's
scrap.
an asset, it's not
No.
taxable. Sales of scrap can be taxable if it is the company's product or byproduct.
What about profit on sale of fixed assets?
Not taxable. You
It's
can't
not
tax that
taxable.
one. That's capital gain.
You are right. Profit on sale of fixed assets is not taxable, but sales of scrap is not due for capital gain tax. So it will be subjected to personal income tax or company income tax. But profit on sale of fixed assets is due for capital gain tax. It will not be subjected to personal income tax or company income tax. So profit on sale of fixed assets is non-taxable. Sales of scrap is taxable. So the only non-taxable we have in this question is reversal. Reversal. So add disallowable expenses. The total disallowable expenses in this question is 40110. Your less non-taxable income, reversal, 674,900. You get what is called what? Adjusted profit. How much is your adjusted profit?
8,513,800.
When you have adjusted profit, Before you subject adjusted profit to tax, what do you normally minus from adjusted profit? Before you subject it to tax.
Capital allowance.
What do you normally minus from adjusted profit before you subject it to tax? You normally minus capital what?
Allowance.
Capital what?
Allowance.
Allowance. Before adjusted profit can be subjected to tax, you will minus capital allowance if there is capital allowance.
It's capital allowance in this question.
So we minus the capital allowance. We minus it. How much is your capital allowance?
48,000.
So the balance is 8,465,800. This one, we can call it under our earned income. If we go to my format, our format, under the earned income, this 8,465,800 is the profit from business, which is under the earned income, which is called trading income. Is the profit from business, which is under the earned income, trading income. So that means what I'm saying in essence is I can say this is my trading income from trading or profit from business, which is under the earned income. What I'm saying in essence is this is your earned income. This is your what? Earned income. Earned income is 8,465,800. In this question, we don't have on earned income, though we have on earned income. What on earned income do we have in this question? Who can tell me? What on earned income do we have in this question? If you look at note 2,
Gross dividend.
gross dividend, it's an unearned income, Abi?
Yes.
No, the examiner, when you have earned income, this is your earned income plus unearned income. That dividend, you are still going to minus it as frank investment income.
Yes.
Do you understand?
Yes, sir.
That is the reason why they did not recognize the dividend, because they know that they are still going to minus it. Now,
minus 1 mark.
Less tax exempt. What are your tax exempt in this question? Tax exempt. What are the tax exempt in this question?
Donation.
Is donation tax exempt?
Sorry.
Pension.
Life insurance.
We have life insurance, 600,000. NHF, 120,000. NHIS, 48,000. These are the tax exempt we have. So NHIS is how much? 48,000. Sorry, I put 28,000. Let me do the correction. It's 48,000, not 28,000. When you minus your tax exempt, that means your gross income is going to be 7,600,000 and what? 697,800. 7,600,000 and what? 97,800. That is your what? Your tax exempt. 7,697,800. That is your what? Tax exempt. Do you understand?
Yes, sir.
From this, you now less tax relief, which is consolidated relief allowance. You less tax relief, which is consolidated relief allowance. Higher of 1% of gross income or 200,000. Which one is higher among the two? Which one is higher?
200.
Which one is higher?
200,000.
200,000. %20 of gross income. 20% of gross income. 1,539,560. The sum of the two. 1,739,560. So what is your chargeable income? What is your chargeable income? Your chargeable income is 5,958,240. That is your chargeable income. 5,958,240. That is your chargeable income. From your chargeable income, you can compute your tax liability. From your chargeable income, you can compute your what? Tax liability. So what will be your tax liability? First 300,000 at how many percent? 7%. That one will give us 21,000. Second 300,000 at 11%. That one will give us how much? 33,000. Another one. Next 500,000 at 15%. That one will give us 75,000. Another one. Next 500,000 at 19%. That one will give us what? 95,000. Why we have another one? Next 1.6 at 21%. That one will give us 336,000. If we add all of them, the balance is 2,700,000 and what? 758,240. That one will be at what percentage? At 24%. That will give us 661,978. 661,978. When you add everything together, is this 1,221,978. 1,221,978. That is the tax. Can we look at one more?
Yes, sir.
Yes, sir.
So let's look at question 5. This question 5 is more concrete. Question 5. Let's look at it.
Can you read, sir? Can I read, sir?
Yes.
Mrs. Nike Isiaka is an employee of Shell Petroleum Limited. She gave you the following information and asked for your advice in respect of her potential tax liability in 2023 year of assessment. Year ended 30 June and 6 months too. So year ended 30 June. For 2021, basic salary is 20,000 naira. For 2022, basic salary is 24,000 naira.
Don't read them. Don't read them. Just say
Okay.
salary, entertainment.
Okay, salary, entertainment, utility allowance, housing allowance, Transport allowance. Nike resides in Lekki Phase 1, Lagos State, and derives the following benefit from his employment. Scroll up, sir. A company car which cost 30 million naira at acquisition was provided for her use with effect from July 1, 2023. The market value of the car in 2023 was 55,500,000. A company house with rateable value of 2,500,000 for 2023 was provided effect from 1 April 2023. Prior to this date, Nike was in receipt of housing allowance. An amount of 4,800,000 naira shown above was for 9 months to 31 March 2023. The employee does not reimburse any rent to the employer. Nike runs a part-time business under the name A&A Enterprises. Recent profit of the business as adjusted for the purpose of taxation are as follows. Year ended 30 September 2023 is 4.4 million. Year ended 30 September 2022 is 6.6 million. Year ended September 30, 2021 is 5 million. Capital allowance claimable is as follows. Year 2021, 450,500. Year 2022, 510,125. Year 2023, 712,000. Year 2024, Nike donated 750,000 naira to Nigeria Institute of Trypanosomiasis on 4 January 2023. She owns 35% of the equity in R&D Company Limited, which was incorporated in 1/1/2023. The company was set up for the purpose of research and development, and cost to Nike is 600,000 naira. Contribution to NHF and National Pension Scheme are made respectively. Can you make scroll up, sir? She insured her life and that of her spouse, Mr. Tunde, and this she paid 2,800,000 naira and 1,700,000 naira respectively as annual premium. Investment income were as follows: dividend, gross, and fixed deposit. You are required to compute the tax liability and monthly tax due.
Thank you very much. Yeah. So, Mrs. Nike Isiaka, we are asked to compute the tax liability. For which year of assessment are we asked to compute his tax liability?
2023 year of assessment.
Year of assessment. We now divide this income into two. We have earned income and what?
And trade income.
On earned income, Abi? Earned income and what? On earned
income.
Now, looking at this question, earned income, example of earned income means employment income, Abi?
Yes, sir.
Yes,
Employment income is assessed to tax on what basis?
actually.
Actual.
Now, from this table, which employment income are we going to take?
2023.
2023.
2023, you are right, my people. 2023. But the examiner said this information given to us, year end 30th 6, 2021. Year end 30th 6, 2022. Year end 30th 6, 2020 what?
2023.
2023.
We are to correct.
That means how many months belong to 2023 among it?
6 months.
6 months. Because this 2023, this 32 million, when does it begin? When does it start?
July.
July when?
July 1st.
July 1st of July what?
2023.
No, it ends in 30th 6, 2023. year end 30th/6/2023. That means it
Yes.
will have started when?
2022.
July.
July 2022.
1st of July 2020 what? 2022. Do you understand what I'm trying to bring out? This 2023 period started 1st of July 2021. 2022 started.
It's not
I
clear. It's not clear.
I have a question there.
Okay, ask your
Is
question.
the examiner trying? Yes, is the examiner trying to tell us that government tax year in this question is ending June, or is it just the personal income tax? You have to follow the government tax year, which is January to
Yeah, you have to
December.
follow, but based on this table given to
So
us, look at the table
yes,
given to us. They said year end 30th June. Year end 30th June.
that means government year will be
Which is
ending
12
30th
months.
June. Is that what they are saying?
Is it the accounting
No.
year we are looking at here?
The accounting year.
Because
The accounting year. The accounting year is what we are looking at. This question, look at the table. They said all this information given to us, so everything is ending 30th June. Yeah.
okay, the examiner
You
is
don't
very
understand?
wicked.
Huh?
The examiner that did it is very wicked. That thing is a trap.
Is what? A trap.
It's a trap. Because personal income tax, we are all used to the January to December government tax year. So trying to break the
I agree with you.
income of the employee.
Yes, the examiner said it's an exam. You should know. Look at the beginning. Since they write year end 30th June, that means everything ends in 30th June.
And a new year starts immediately from July.
Yes. Another one starts from July.
Okay.
Let's say, for instance, the one of 2021, year end 30th June 2021. It will have started 1st of July 2020, Abby. Do you agree with me? Secondly,
Yes,
it ends 30th June 2021. That means after 30th June 2021, 1st of July 2021, this second one will start and end 30th June 2022. Abby?
2022. Yes, sir.
The third one, it will start 1st of July what?
2022.
And end when?
30th June 2023.
And we know that all this information given to us, they are employment income. They are assessed to tax on what basis?
Actual year.
Actual year means January to what?
December.
December.
So now for the basic salary, we need salary of January to December 2023. What do we do?
Yes. So we take 6 months from that 2023 and complete it with the remaining 6 months in that 6 months to 31st 12 2023.
Correct. Correct.
Ah.
That is what the examiner is trying to take us to. That is what the
That
examiner That is what. So
Are we going to still call this actual year basis like this? Like we are bringing it from the previous year to the current year?
No.
No, it's still the same year now.
It's still the same 2023 now. We
Like,
take
but we are
6
having
months.
6 months.
6 months we take here is from
It's still from January to December.
They just break it to confuse us. The examiner just break it into two to confuse us.
Can you explain better on this?
6 months we take here is from January to what?
December.
January to June. The 6 months we want to take from this 32. Abby?
Yes.
The remaining 6 months, July to December, is already given to us.
That means that means that 32 plus 19, what is this, for basic salary will be a year.
Yes. This one we take half of it, 6 months. January to June. Because this one ends 30th June 2023, Abi.
Mm.
The 2023 that was included here is from January to what?
January to June.
June.
Yes.
To balance the 1 year, where is July to December?
That's 19,000 now.
That is the 19,000. So, looking at the solution, you can see base salary, basic, 6/12 times 32 plus 19,000 is going to give you what? 35,000. That is from January to December 2023. Do you understand?
Yeah, I think I understand.
Let's go back again. The other one, entertainment. We do the same thing. Entertainment is part of employment income. Entertainment allowance is part of employment income. 6 months from this 38, the balance of the 6 months is already 2,000 given to us.
Mm.
6/12 times 38 plus 2,000, it will give us 39.
Yes.
Next is what? Utility. Next is what?
Utility.
6/12 times 16 plus 1,000.
Plus 1,000.
18. Next is what?
Housing allowance.
This housing allowance, 6/12, Abi, times 48
Yeah.
plus 0, Abi. But additional note, look at one note.
9.
I want to talk about something. As a company staff, as an employee, when you are collecting housing allowance, you are not going to entitle to benefit in kind accommodation again. Do you understand?
Yes, sir.
It's either you collect housing allowance or you collect benefit in kind accommodation. Now, there's a note that affects housing allowance. What is the note that affects housing allowance? Somebody should help me read this note.
A company house with rotable. Sorry.
A company now with a rateable value of 2,500,000 for 2023 was provided effect from 1st April 2023. Prior to this date, Nickel was in receipt of housing allowance an amount of 4.8 million, shown above, was for 9 months to 31st March 2023. The employee does not reimburse any rent to the employer.
Now, they were giving Nickel housing allowance before. The amount shown above, 1.20 shown above, is this one they are talking about. Oh, this one that I put my cursor. This 4.8. They said they started giving him accommodation. When does Nickel start enjoying accommodation? Company house. 1st of April. That means from 4th of April to 31st of December 2023, it will enjoy what? Accommodation. How many months housing allowance is going to collect in 2023?
3 months.
3 months. They now tell us that this 4.8, that is shown in this table, look at it, housing allowance, 4.8 shown in this table, is for how many months?
9 months.
Is for 9 months. Though it's supposed to be for 12 months. You know, year end 30th June, 12 months. It's supposed to be for 12 months. But the examiner tells us that no, it does not reach 12 months. Why it does not reach 12 months? Because as at 1st of April, Nike have started enjoying what?
Accommodation.
Accommodation. So April, May, June, we're supposed to be included here. Nike have started enjoying accommodation. That means this 4.8 is not up to 12 months. Abi?
Yes.
Is for how many months?
9 months.
9 months. It ends 31st of March. Ideally, when is it supposed to end?
June.
June. But as at 1st of April 2023, Nike have started enjoying what? Accommodation. He cannot collect housing allowance again. So out of these 9 months, how many month housing allowance is for 2023?
3/9.
3/9. So you can see how why I use 3/9 times 4.8, 1.6. Do you understand?
This question is a set off.
Yes, sir. I have a question, sir.
Yes.
Okay, sorry. Just for clarification, I wanted to ask. You know, the accounting year that you said initially started from 1st July 2022 to 2023.
30th June.
Yes, and it started from 1st July to 30th June. Yes. So I think that one that they said 9 months, that was what the company did. That started from July 2022 to March, which is 9 months. But since we are computing for 3 months, that's why we took that 3 months out of it.
Yes, we are computing for the one of January, February, and what?
March.
And March. That is why we took 3 months.
Okay, sir.
Now, let's go to transport allowance. This transport allowance, 2,000, is for 1 year. How many months do we need in 2023?
6 months.
6 months. 6/12. But there's a note too on transport allowance. In a company, you can be giving transport allowance or giving what?
Car.
If you enjoy benefit in kind official car, you will not be entitled to transport allowance.
Yes, sir.
So let's go to this question. When does this Nike start enjoying car? When?
1st July 2023.
1st July. You can see that this one is clear. He started enjoying car 1st July. That is the reason why under this transport allowance, the 6 months, the end of the 6 months, we don't have anything there. Abi?
Yes.
So this 2,000 is for 1 year. How many months do we need?
6 months.
So 6/12 times 2,000. That is transport allowance. 1,000. We are still on employment income under the earned income. We are still on employment income under the earned income. After this one given to us in the table, we now talk about benefit in kind. It's part of the employment income under the earned income. What are the benefits in kind Nick can enjoy? What are the benefits in kind Nick can enjoy?
House.
Okay, number 1, housing allowance. House accommodation. How much accommodation Nick can enjoy?
2.5 million.
for 2023, Abi,
Yes, that would not be.
was provided. This
Yes,
2.5 million is for 1 year.
that's about 12.
He started enjoying it when?
April 1st, 2023.
So what are we going to do for it?
That would be 9/12.
9/12. So benefit in kind, accommodation, 2.5 million, 9/12. It will give us 1,875, which is 1,875,000.
875.
Another benefit in kind we have in this question is what?
Official car.
Official car. How much is the cost of the official car? If there is cost, don't use market value. But if there is no cost, you can use market value. So the official car is how much?
30 million.
What is the market value?
55.5 million.
Since they give us the cost, my people, leave the market value. Use the cost.
Okay, sir.
So how much are we going to recognize as benefit in kind for this official car?
5%.
5% of the cost. You know, it's for 1 year. That 5% of the cost is for 1 year. How many months are we going to compute for this official car?
9 months.
Is it 9 months? It's 6 months. From July 1st.
6 months.
Okay, yes, 6 months. 6 months, sorry.
So 1st of July, 6 months. 6/12 times 5% times 30 million. That will give us 750. That is earned income. The earned income we treated now, they are the employment earned income. Apart from employment earned income, what type of earned income do you think we have under the earned income? Earned income of trading, profits when you are doing business. Profit from business or trading income is part of earned income too. When you are doing business. Does Nick have any business doing?
Yes, he started a business too.
Okay. From this adjusted profit given to us, from this trading business is doing, which one are we going to take?
2022.
Because trading income is assessed to tax on what basis?
Preceding year basis.
We are in 2023 year of assessment. We are going to take the one of what?
2022.
2022. Anytime we take adjusted profit, what do we minus from adjusted profit before we tax it?
Disallowable
expenses.
No, it has already been adjusted. It's an adjusted profit. This income is an adjusted profit. What do we minus from adjusted profit? Capital allowance.
Yes.
This capital allowance, which one are we going to take?
2022.
2022.
My people, tax year. What is another name for tax year?
Oh, year of assessment.
Year of assessment. Another name for tax year is what?
Year of assessment.
So which year of assessment are we computing?
2023. Capital allowance is for current year.
So that's wow.
They don't normally express capital allowance in year end. In a rare case, they express it in year end. But look at this question. They express the capital allowance in year of assessment. This 712 is for the 2022 year end. But they give us as year of assessment. This tax year means year of assessment. 2023 year of assessment. So the one we are taking for capital allowance that we are removing from 6,600,000, we are removing 712. Do you understand, my people?
Yes, sir.
No, sir. Please recap, sir.
So look at the capital, look at this. Adjusted profit 606,600,000. Less what?
Capital
Capital allowance.
So the remaining profit is 5,888,000. So you want to ask a question? Now, we have done with earned income. We have done it with what? Earned income. Let's go to unearned income. Where is unearned income? Do we have unearned income in this question? Do we have unearned income? Unearned income means income derived from investment. Do we have unearned income in this question?
Yes.
What are the unearned income we have?
We have dividend, we have rents,
Fixed deposit interest.
and fixed deposit
Interest. They are all unearned income. If you go and
Unearned
check my format, they are all unearned income. Look at the table. Which unearned income are we going to take? Which unearned income are we going to take?
It should be for 2022.
2022. Because unearned income is assessed to tax on what basis?
Preceding year.
Preceding year basis.
We are in 2023 year of assessment. We will take unearned income of 2022. Dividend gross 25,000. Rent gross 60,000. Fixed deposit interest net 27,000. Net means they have deduct what?
Tax.
Withholding tax.
Withholding tax.
And the withholding tax on this dividend is 10%. They have deduct 10%. They get the net. While you are computing your solution, you must convert it back to gross. You must do what? Anytime you want to report on earned income, you must report the unearned income in what?
In gross.
In gross. You must not report it in net. This one that don't give us in net, that means they have deduct withholding tax. My people, look at it. Let me show you something. See, this interest, the gross is how many percent?
10%.
The gross is 100%.
100% rather.
Withholding tax is how many percent?
10%.
10%. That means that net amount given to us, net, is going to be how many percent?
90%.
90%. We know, look at it now. They now give us 27,000. But we are looking for the gross amount. What do we do to get the gross amount?
27,000 times 100 divided by 90.
We will say 100 over 90 times what?
27,000.
27,000. So 100 times 90 divided by answer, you divide it by 90. That means the gross is how much?
80,000.
I'm not sure. I'm supposed to share something. I'm using Excel. Let me share it. Let me share the Excel. Have I shared the Excel? I'm doing
Not
Excel.
yet, sir. Not yet.
So look at the Excel I'm sharing. I said gross 100. Abby? Can you
Yes.
see the Excel?
Yes, sir.
Yes, sir.
Withholding tax 90, Abi.
10,
Withholding tax 10. That means net is how much?
90.
90. We are now giving net amount. The net amount is how much?
27,000.
And we are asked to get what? The gross
Gross.
amount. If we want to get the gross amount, we said 100 over 90 times the net amount. That means 100 times 27 divided by 90. At the end of the day, we will get the gross amount. So the gross amount is how much?
30,000.
30,000. That is the gross amount. 30,000. So that means for our unearned income, we take 25,000 for dividend gross. Rent gross, how much are we taking?
60,000.
Fixed deposit interest gross, how much are we taking?
30,000.
30,000.
30,000. You can see them. So the total earned income is 51,813,000. The total unearned income is 115 million. Earned income plus unearned income, what do we get?
Total income.
Summation of earned income plus unearned income is called what?
Total income.
Our total income is 166,813. From our total income, what do we minus?
The franc investment income.
Which is how much?
Dividend of 25.
Gross. We minus it again. Our net total income is how much?
141,313.
813. We now less what is called what? We less what?
Tax exempt.
Tax exempt. Now, look at this question. Look at this question. Note G. What are tax exempt we have? What are the tax exempt we have? We have, when you are a taxpayer, if you insure your life and that of your spouse, the premium you pay for your life and that of your spouse is your tax exempt. The two together. Look at this woman. Insured her life and that of her spouse. How much? The insurance premium you pay together.
0.7.
How much is the two? How much?
3.5.
3.5. That is what we recognize under the tax exempt as insurance premium, life assurance policy. 4.5. Can we see that? Can we see the 4.5?
Yes, sir.
No. Apart from life assurance premium, what other tax exempt does it pay? What other tax exempt do we have in this question?
NHF and pension.
NHF and pension. How much are we giving the amount? How much? We are not giving the amount, my people. What are we going to do since we are not giving NHF amount and pension amount? If we are not giving any amount, we go and look at under the personal income tax, what is the rate of NHF, minimum rate of NHF you can deduct. I told you last week, if you are not giving the amount, you use the rate. Which rate are we using for NHF? Let me take you back to the notes. NHF, which rate are we using if we are not giving the amount? NHF, if we are not giving the amount, which rate are we going to use?
2.5%.
2.5% of what?
Basic
salary. 2.5% of what? Basic salary. So go back to this question. We are not giving the amount. We are to use 2.5% of basic salary for the NHF now. (2.5% of basic salary. How much is the basic salary in this question? How much basic salary do we get in the solution? How much is the basic salary we get? 35. 2.5% of 35. That is our NHF. 2.5% of 35. It will give us 875.
875.
For pension, we are not giving the amount of pension. If we are not giving the amount of pension, what rate are we going to use?
5.
What rate?
2.5.
Pension.
8% of basic housing and transport.
What?
8% of basic housing and transport.
Do you understand? You know, every month from our salary, they normally deduct pension. How much that they deduct? That our employer deduct from our salary?
8%.
8% of some of what? Basic housing and what?
Transport.
Now, you now go up. 35,000 is basic salary. Plus what? Housing allowance. How much?
37,600. Okay.
Housing.
1,600.
Plus 35,000. That is 36,600, Abi?
Yeah. Yes,
plus
sir.
what?
1,000.
Transport. 1,000. That give us how much?
37,600.
37,600. So 8% of 37,600. 8% of what? 37,600. 8% of it. How much is it giving us? Hello? Can you hear me?
Yes, sir.
Yes, sir.
Yes, sir.
So our tax exempt, we sum it together. 8,383. We less it from the net total income. We get our gross income. How much is our gross income? 133,430.
400. Alphabet.
From this, our gross income, we can now do what? Compute our what? Tax relief, which is consolidated relief allowance. Our consolidated relief allowance, higher of 200,000 or 1% of 200,000, 1% of gross income. Which one is higher? Is it 1% of gross income that is higher or 200,000?
1%.
Is it 1% that is higher or 200,000? Look at our gross income. 1% of it is how much? Mind you, you know, we are using thousands. We are using thousands. This gross income of 133,430 is 133,430,000. 1% of it will give us 334,000. It is higher than 200,000. That is the reason why we pick it. It is higher than 200,000. That is the reason why we pick it. Plus 20% of gross income. 20% of 133,430,000. Addition of the two, you minus it to get your chargeable income. So your chargeable income will be 100,000, 5,410,000. 105,410. 105,410,000. From there, you will now less. When you get now, you can now compute your tax. If you want to compute your tax, first 300,000 at 7%, 21,000. Second 300,000, 33,000. Next 500,000, 75,000. Next 500,000, 19,000. Next 500,000 at 19%, 95,000. Next 1.6 at 21%. $336,000. How much is remaining? If we add 300,000, add it plus 500, and 1.6, that is 3.2 million. If we minus it from 105,410,000, if we minus it from 105,410,000, how much is it remaining? It remains 102,209,000. I'm not using 1,000 sign again. I'm using the full amount. It remains 102,209,700 at 24%. That one will give us 24,530,328. This is your tax due. The tax you need to pay. Mrs. Nickel need to pay. The tax Mrs. Nickel is going to pay is what? 25,090,328. Now, there are some income of Mrs. Nickel that they have deducted withholding tax as source. There are some income of Mrs. Nickel that they have deducted withholding tax as source. What are the income that withholding tax has been deducted as source?
Yes.
This rent of 60 million, they have deducted withholding tax of 10% as source. 10% of 60 million. That is 6 million. This one too, they have deducted withholding tax of 3 million as source. This interest. So the tax deducted as source, we are going to minus them. Less withholding tax. 6 million for rent, 3 million for interest. Two of them, we are going to minus it from the tax due. That means our next tax due is 16,090,328. At the end of the day, we are asked to compute our monthly tax due. What is our monthly tax due? Our monthly tax due. How much tax that they will be paid every month? Since this 16,090,328 is the annual tax due, for us to know how much they will pay monthly is to divide it by how many?
12.
We divide it by 12. So that is it on this question. Please, let's take our time and study this question very well. Do you have any question, any issue?
Yes. I have a question, though my network was funny for a while. I don't know if it was treated. She also invested in a limited liability company. Did you treat that part?
Okay, where? This one?
Yes.
My people, invested in research and development company. We did not treat it. It's of no relevance, sir.
Okay.
E and F is of no relevance to us.
Okay, but they said she gave 600,000.
Yes, it's of no relevance to us, my bro. It's not taxable. So it's
Okay.
of no relevance to us.
Because it's limited, I mean, it's a separate entity.
Yes.
Okay.
Any other question? So in the absence of no question, we can call it a day. Thank you for having me.